Good morning and happy Wednesday, all you wonderful melon heads out there. I hope you guys are well. Today is May 31st, 2023. Stocks are down virtually across the board this morning, all on this manufacturing news out of China. It hit late last night. Chinese PMI, the manufacturing came in at 48.8. China manufacturing is in decline. What happened to the China reopening? You guys remember back in January? Oh, the China reopening. We're going to use all this oil. We're going to use all this copper. It's going to revitalize the global economy. There's going to be a surge in trade. You hear that? Nothing. Nothing out of China. Yeah, they reopened. They had 1 or 2 good months. But you know the funny thing about the world's factory? If nobody can afford to buy anything, they're not going to sell it. Global trade is grinding to a halt. You can see it in the rates of moving freight across the ocean. It is trading at like 1/10 of what it traded at a year ago or 2 years ago during the port crisis when you couldn't get anything through American ports. The China reopening, I don't want to say it was fake, but it's over. That was it, guys. Kind of lackluster, not much of a grand finale there. And now we're left with the realization that the world economy is slowing. It's slowing rapidly. And forget all the stupid, pointless speeches that the politicians are making, trying to convince you that what you're seeing and hearing is not true. Forget what NVIDIA stock is telling you, for the love of God. And look at what's going on in the economy. Look at the consumption numbers. Talk to your neighbors. Talk to your friends and your family. Ask how their businesses are doing. You're going to see trends. You're going to see a common theme. The economy is slowing. Inflation is slowing. Disinflation is on the rise. And deflation is right around the corner. And you can see it in commodities. You can see it in China. You can see it everywhere except asset prices. And that's coming. And a lot of you bullish trolls out there, I know who you are. You show up in the comments every day. You say, oh, the stock market is up. Well, one of these days, the stock market is not going to be up. You're going to wake up the stock market and it's going to be down. It's going to be way down. And I don't think we're going to see you in the comments on those days, are we? Yeah, I think you're gonna clam up real fast when that happens. Now I get it. Jack is a perma bear. It's written on my sleeve right here in invisible ink. Perma bear. One day I'm going to be optimistic, but this is not that day, and I'm going to show you the data to support it. And with that, we are going to shrink my big melon of a head, and let's take a look at what's going on in the markets this morning. The S&P is down 15 points. Check it out, guys. 41.89. That little stint above 4,200. That key technical level. Boy, that was short-lived, wasn't it? Take a look at the long-term chart of 4,200, that resistance level that the market has struggled to recapture. At that opening yesterday with that big surge we saw, I thought we might have been breaking out from that. Nope, came right back down, closed just above 4,200 yesterday, now right back below. Was that a false breakout or just a first failed retest? Only time will tell. Looking over at the Dow Jones, currently down 120 points, about a third of 1%, at 32,922. And the NASDAQ is down 34 points, about a quarter of 1%, at 12,979. The U.S. dollar continues to rise, up 26 basis points this morning at 104.42. A theme I've been talking about a lot on this channel is a dollar shortage. Dollar shortage is coming. You know another word for a dollar shortage, folks? Deflation. I know everybody's still hyperinflating about inflation, and the Fed is talking about, our 2% target, and we're acutely aware of how much inflation causes the average family. Oh, Jerome Powell, you're just like us. You're just a regular guy. No, I'm telling you, folks, deflation right around the corner. You can see it in the DXY. You can see it in the M2 money supply. Soon you'll be able to see it in asset prices. Looking over in the bond market, we have got yields are lower virtually across the board this morning. Not too surprising, because it looks like the debt ceiling deal is done. Remains a technicality right now. I'm not going to say all clear, but it's mostly clear right now on the debt ceiling. The 1-month Treasury yield is down 7 more basis points at 5.19. The 10-year is at 3.67, down about 3 basis points. And the high point of the yield curve is the 6-month Treasury, yielding 5.48. Looking over at the commodity board right now, we have got gold is up a little bit, about $6 at 1,983, still below that key 2,000 level. And silver's having a pretty good morning, up 18 cents despite the stronger dollar. We're 0.75% at 23.41. Crude oil, though, down 44 cents. It was down more than $1 a few minutes ago. currently trading at $69 flat for West Texas Intermediate. And we've also got natural gas doing all right this morning, up about a nickel or 2.5% at $2.38. And on to the big story this morning. China's factory activity falls faster than expected as recovery stumbles. And I think this is too modestly worried. I think the China recovery is done. It's over. Reading over real quick, we have got China's factory activity shrank faster than expected in May on weakening demand, heaping pressure on policymakers to shore up a patchy economic recovery and knocking Asian financial markets lower. And you got to love these stories. Anytime there's anything negative in the mainstream press, they'll also talk about heaping pressure on policymakers. Please, money printers, please, central banks, save us from these vital economic functions of contraction in the economy. Please save us from these little brush fires that are necessary to build a healthy, vibrant economy. No, please print money and return us to ZIRP, zero interest rate policy. Please, policymakers, save us. And then we wonder, why are the economic corrections so hard and so severe when they finally do show up? Because every time things get a little bit difficult, we just go hat in hand to the central bankers and ask them to go burr. And then everybody wonders, how come my savings isn't worth anything anymore? What happened? Who could have seen this coming? We're addicted to stimulus. And here is the data, folks. China's NBS Manufacturing PMI. Remember, with PMIs, anything below 50 means contraction. Anything above 50 means expansion. The official NBS Manufacturing PMI unexpectedly fell to a 5-month low of 48.8 in May of 2023 from 49.2 in April. So not only is this the second consecutive month of contraction, but we are now contracting faster. This contraction is accelerating in China. But the reopening said it's supposed to be getting fast. It's supposed to be expanding. What's going on? That's missing market estimates of 49.4. The latest print also pointed to the second straight month of contraction in factory activity amid weak domestic and global demand. This is not just a China thing. This is not just a U.S. thing, folks. This is global. Output contracted for the first time in 4 months at 49.6 versus 50.2 in April. New orders, 48.3 versus 48.8. Buying activity, 49 versus 49.1. Export sales, 47.2 versus 47.6. Everything is in contraction. All of the data points that make up this index, they're all in contraction. Employment activity, 48.4 versus 48.8. The one positive factor, delivery time, was 50.5. And why is delivery time? Because the new orders are down. So, of course, the lead times are going to shrink. It was 50.5 versus 50.3. Input prices declined. Remember, we were talking about deflation on the rise, disinflation? Well, input prices declined, 40.8 versus 40.6. Output charges fell, 41.6 versus 44.9. The one thing that remains upbeat, the one data point that is still in expansion territory, except for delivery times, which is modestly in expansion, is going to be business sentiment. Remains upbeat despite the reading hitting its lowest in 5 months at 54.1 versus 54.7. Now, I'm not too surprised to see business sentiment being upbeat, because if you live in communist China and the National Bureau of Statistics, aka the commie data point guys, call you and say, are you optimistic about the future? Are you going to say, no, I'm negative about the future and take the ding to your social credit score? Or are you going to say, oh, I'm totally upbeat. Yep, keep going. Xi Jinping doing a great job. Keep up the good work over there in Beijing. Of course, sentiment is in expansion territory. It's China. And here you can see it in the chart here. We were way down back in December of last year. We were at 47 in the manufacturing PMI. That was when we had the protests going on at the iPhone factories in China. You remember how awful things were with the zero COVID policy at the end of last year? And then we had January came along and the big surge that China reopening. We're going to use all this oil. We're going to use all this copper. And now 4 months in a row, we've been in declining. Now we've got 2 months in a row into contraction territory. We got the same thing over in the non-manufacturing PMI, and services still slightly positive, but way down from where it was. The official NBS non-manufacturing PMI, or services, for China was down to 54.5 in May from 56.4 a month earlier. Now, here's the funny thing. Virtually Every single data point that makes up the services PMI was also negative in China. Look at this. We've got new orders, 49.5, foreign sales, 49.7, employment, 48.4. Delivery time contracted slightly again, 51.9 versus 52. So that one is in expansion territory. Again, delivery times, if business is slowing, your lead time should get lower. Input costs dropped 47.1. Selling prices dropped 47.6. But sentiment, once again, that rosy Chinese sentiment softened to a 5-month low of 60.4 versus 62.5. Virtually every data point is in the gutter, but again, the CCP, their National Bureau of Statistics, calls up business owners. How's your business doing? Oh, A-okay. Number one job. Doing a really good job, Xi Jinping. Please don't ding my social credit score. Please don't seize my business. So sentiment remains overly optimistic. But again, here we go. This is the chart going back to December of last year. And look where we were in December. That's when we had the protests in the iPhone factories. Big surge in optimism in January. It peaks in March, and now 3 months of decline. And guys, you can see this in a couple of these charts here. Check out copper futures right now. All right, remember the China reopening, everything was going to be so good. Oh, here we go. January comes, big surge. Oh, copper, China's going to make all this stuff. They're reopening the factories. It's going to be great. Not so much. We have just declined ever since. Same thing in oil prices, although we didn't get the big boom in oil demand because worries about a global recession were there. But ever since China reopening, we were supposed to use all this oil. We were supposed to see the chart doing this when the Chinese started manufacturing everything. Instead, we've gotten this, and now look what's going on. Well, now we've got OPEC is about to get together. There's some infighting between Russia and Saudi Arabia going on in OPEC. Their next meeting is in just, 4 days now, June 4th. We find out if they're going to cut production or not. If they don't cut production in OPEC, you're going to see these prices fall further. If they do cut production like they did a month ago, prices may stay where they're at. They may bounce a little bit. But remember, folks, we're just 1 month removed from a 1 million barrel per day cut in production from the OPEC Plus members that came out of nowhere. Prices are lower than they were a month ago. So they need to cut production just to maintain prices where they're at. Be interesting to see what comes in January 4th. And if you still don't believe me, check out Patrick DeHaan, a.k.a. Gas Buddy Guy on Twitter. And look at this thing that he just tweeted this morning. According to Gas Buddy data, total Memorial Day weekend gasoline demand between last Thursday and Tuesday, or yesterday, in the United States was down 1.5% from 2022. Memorial Day gasoline consumption down 1.5%. All right, that's only a little downtick. Jack, we making a big deal out of nothing. Do you remember what gas prices were on Memorial Day last year? Memorial Day 2022, gasoline national average price in the U.S. was $4.60 a gallon. This Memorial Day weekend, national average gas price, $3.59 a gallon. The gas price went down $1.01 over the course of a year, and yet consumption is down 1.5%. A 22% drop in price, and yet consumption goes down 1.5%. So again, do you want to believe the politicians? Do you want to believe Nvidia stock? Or do you want to believe what your eyes and ears are telling you? This economy is slowing. It is slowing dramatically. When gas prices drop 22%, consumption is supposed to go up. It's not. Nvidia stock doesn't buy gas. Nvidia stock doesn't stay at a hotel at the shore. Nvidia stock doesn't go on vacation. It doesn't go to the movies. It doesn't eat at restaurants. So, Nvidia stock is so high. Oh, Jack, you're a perma bear. You're believe what you want, guys. I just throw them out there. You do what you want with them. And check it out here in Bloomberg this morning. Commodity crash signals disinflation is taking hold for now. Remember, disinflation means slower inflation. Disinflation still means prices going up. Deflation means prices going down. But we have disinflation right now. We have lower inflation. And check out this paragraph. Let me know if any of this sounds familiar, guys. The drop in commodity prices seems to reflect the stuttering rebound in China, a looming U.S. recession, and supply-side destruction in Europe, said Karsten Bresky, global head of macro at ING. It's indeed possible that inflation could turn into temporary disinflation. In other words, the disinflation is transitory. See how that works? Where have we heard this before? Temporary disinflation. Don't worry, guys. It's just temporary. Remember, M2SL, this is the money supply in the United States. It is in contraction. That's one definition, one textbook definition of deflation is a contraction in the money supply. Another more generally accepted definition of deflation is a contraction in prices. We haven't seen that yet, but we are seeing the money supply shrink. Folks, it is simple math. If there's less money available to chase goods and services, then the price of goods and services will come down as the providers of those goods and services start to compete for less available money. Simple math. The prices will come down and it will start in assets. And if you still don't believe me, take a look at this. This is M2 money supply growth in black versus the red line, which is inflation. We're seeing inflation coming down. We're seeing the money supply come down faster. Right now, the money supply is shrinking at an annual rate of 4.5% year over year. And you have to zoom all the way out to 1930 to find the black line money supply in negative territory. 1930, yeah, that was the Great Depression. So we've already got textbook deflation, folks, a shrinking money supply. We do not have the other textbook deflation, a general contraction in prices, but it is mathematically certain that that will happen, or they turn on the money printers before that happens. That's entirely possible. But right now, if the Fed does nothing, not even stays on their current course, if the Fed just does nothing, prices will come down. Will the Fed do nothing? Only time will tell. Last thing I want to touch on this morning, debt limit deal heads to House for a vote after clearing a key hurdle. It looks like the debt ceiling deal is done. The big thing yesterday was the committee, the rules changed. There was the House Freedom Caucus had a chance of derailing it if they could get a couple of votes. It looks like there is enough bipartisan support to get this deal done. And right now we are at $54.4 billion in Uncle Sam's checking account or the Treasury General account. So it looks like they've still got a day or two to get it done. We'll see what happens. There's still a possibility of some stupid speech or somebody tries to slip something in there at the last minute that derails the whole thing, but that is looking less and less likely. So it looks like we have got a deal, folks. And I got a couple of thank yous I got to send out there. Thank you, Mr. Steve Woitis, who says, all it takes is one large hedge fund or institution to liquidate positions and down markets go. See the movie Margin Call. Well, that is how it started. A fire sale usually starts with somebody dumping everything. You know, you mentioned one hedge fund or large institution. I would just mention, remember that Archegos story, that Bill Hwang guy. You know, Archegos, this hedge fund that very few people had ever heard of. He was one of the big contributors to the Credit Suisse fiasco because of all these highly levered positions. That was a market accident that several months later or a year or two later ended up contributing to the failure of a GSIB bank. So, yeah, who knows? There could be another Archegos out there right now, or, you know, another Silvergate, another Silicon Valley, another First Republic, you name it, folks, another Signature Bank. There's no shortage of potential market accidents that could trigger another fire sale. Oh, let's also remember commercial real estate. That's still out there. That's a big one. That one hasn't even really started yet. It's only pretty much hitting San Francisco where they have that fire sale going on. I did a video about that a few days ago. So thank you very much, Steve Woitis. Appreciate the super chat, the support of the channel, and I agree, sir. And thank you to the inflation situation, who also says, check out year-over-year changes in broad commodities, futures ETFs, no equity exposure, basically a bet on weaker USD, excluding the spike during an emergency. I'll be honest with you, I don't think the dollar's getting weaker. I really don't, inflation situation. I think the DXY is going to continue getting stronger. Keep in mind, other countries across the world, they are still struggling with inflation. They're still debasing their currency. Erdogan just won re-election in Turkey. Inflation in the Turkish lira is going to get worse. It's causing a dollar shortage as people are dumping their lira and scrambling for the dollar. That's driving the DXY higher. The debasement of currencies in other countries is adding to the dollar shortage globally, which will result in dollar commodity deflation. One reason why the strengthening dollar is bearish for commodities. Let's see, year-over-year changes in broad commodities. Yeah, year-over-year, I mean, we're about a year and 2 months removed from the initial invasion of the Ukraine, right? The price of commodities across the board were going vertical this time last year. They've done nothing but come down ever since. So thank you very much, inflation situation. I appreciate the super chat and the support of the channel. Thank you to my Patreon supporters for everything you guys do for the channel. We're going to do our Zoom call tomorrow on Thursday this week because the long weekend screwed up my schedule. And I want to say thank you guys very much for everything you do for the channel. Link down below should you feel so inclined. Hi, Mom. Hi, Dad. I love you guys. Last thing, let me know down in the comments. Should we bring back the intro music for the daily live streams? I see a lot of comments say, where's the intro music? Where is it? I usually only do it on my longer live streams on Fridays. But if you guys want it, you guys are going to get it. So let me know down in the comments. Music or no music at the intro. I'll let you guys decide. Till next time, live small and dream big.